All right. Good morning, hello, and welcome back to the UK Live. It is 2:30 a.m. now, early hours of 24th of January, and straight away the report card uh, says 1035 points. In the currencies and metal sector, and about 7,000 points in Bitcoin. Since the day we began, 21st of November 2017, uh, we got to make a bet on the currencies and the metal side. So last 24 hours, 3 to 4 stops triggered, and let's now concentrate again on the five charts. Sorry, starting from the Euro USD, dollar index, gold, silver, and Bitcoin. All right. So once again, a warm welcome to those who are joining in fresh, tuning in fresh. Uh, do feel to do feel free to go through all the educational videos or the live videos, and kindly send in your comments as well. All right. So let's get started with the Euro USD. All sorts of confusion, and why not? It is wave 4 at a larger degree. So we want to discuss a probability within the fifth wave now. I'm just still putting a question mark whether we are done the fifth wave or not. Big question mark there. So how do we interpret the existing wave counts from wave 4 termination point at 1550? Still the best bet is waves 1, 2 and 3, in spite of the fact that a new high was printed just a few hours back. We are still expecting wave 4 to terminate around the 2060 mark. There is no change structurally, at least for now. There's no change. If there is any, watch out for the updates. We sent a few charts on your telegrams yesterday, but most of them have been passed. All right, and that happens. We are dealing with a live market, and it's difficult to predict whether it's going to be a standard flat or an advance. We were expecting a standard flat across the board, and what is looking now could be an expanded flat in the making. Right, so we are counting on the expanded flat now. Yes, it agreed to the fact that there should have been a mention of the alternate potential wave count. This is what I will be beginning to do from now. Alright, those are the trend lines. We need to see a break or a bounce at least from the 2060 levels now. Bigger picture still remains intact. Believe it or not, we've got on the wrong side stops being triggered left and right since the past few hours, but bigger picture still remains intact on the scenario where we are looking towards 1.11. Let's have a look at the MACDs and the RSI once again. if you just have a look at the previous swing highs at 23.23 and today's high at 2335, the RSI is at 69 while the previous high RSI was at 73. There is bearish divergence within bearish divergence, I would say, because wave 3 RSI was around the 78 mark. So there good amount of bearish divergence is seen even now in the EURUSD. Aggressively we have went short again, and with a very tight stop loss about the 2355 mark. So how can we interpret the wave counts on the 4-hour chart now? Pretty much simplified version. Wave 1, 2, wave 3, it's an ABCA, ABC capital A, followed by ABC capital P now. There you are. So it's already a 3 and a 3. The next probability is a 5, or if it's dropping down 3, then it will be labeled as a WXY. But corrective waves are always typical to handle a lot more probabilities. I mean, it could be a standard flat in the making, or an expanded flat like what it is doing right now, or a triangle, or a combination. Quite a bit permutation and combinations are possible. So keeping the latest high probable wave count intact, we are now still expecting or anticipating a drop lower towards at least the 38.2%. Even if we rule out an expanded flat, or an ending diagonal view, should be looking towards the 2099, at least 205060 levels. This is what we are expecting, still keeping in the purview the expanded flat scenario. All right. And if the entire structure, the entire fifth wave is an ending diagonal, doesn't look like an ending diagonal now, but if it is still, then wave 4 has got potential to terminate around the 1900 mark. We'll keep a close watch here. I mean, if it continues rallying, then there could be a change in the labeling in the waves. Actually, it could be wave 4, a very shallow kind of wave 4, and then fifth wave in the making. So there could be an alternate count which we'd like to discuss right now as an alternate or wave 4 and higher levels wave 5. Alright. So that's the scenario in the Euro USD trading point of view. Aggressive shorts being taken again around the 2030 mark, with the stop above 55, the target around 2060. All right. So any change, we'll be sending out on your telegrams. Let's move on to the dollar index now. This guy has been beaten down to the maximum recently. Okay, let's do the wave counts first. On the bigger picture again, waves 1, 2, all the way extended wave 3, wave 4, and wave 5. There's wave 1, 2, 3, oh, we still expect wave 4 to terminate at a decent 38.2% retracement of the third wave, and then wave 5 lower. All right. Okay, the trend line resistance and the Fibonacci ratios. Before watching the oscillators, trend line resistance, the Fibonacci ratios. Please keep the bigger picture always in mind. We can get beaten down on the short term trade setup, losing 50-60 pips. That is fine. It can happen to anybody. All right, but keep the bigger picture. 98.47 and 95.16 in mind, please. We are expecting 95 levels to be hit, and subsequently around the 98 levels, right? If we watch the oscillators, AM EST and the RSIs just before switching back on the 4-hour chart. If you look at the RSI, it's 25 now, and never has it gone below the previous wave 3 termination point. Bullish scenarios are still into play, and got to consider that as well. See, brothers and sisters, if you're not comfortable going aggressive longs, because I always mention aggressive or conservative, if you're not comfortable doing that, then please stay away from trading euros or the dollar index, or for that matter even Bitcoin for now. These are all aggressive trade setups that we are trying to trade. Yes. Okay, let's do a okay, 4-hour chart, and let's get rid of the daily chart lines. Not quite indifferent actually at this point in time as well, even though we've got stopped out. I mean, the expanded flats are very tricky to handle sometimes. You see, you got I think wave 3 kind of terminated here, we are expecting the fourth wave to rally all the way towards the 91.50, 92 levels. And what it's doing right now is an A, B, and C kind of wave. 3, and could be wave 5. It's going to take quite a few of us who are willing to take shots at this point in time by amazing surprising moves. I will agree to the fact that staying with me will might give us a short term pain, but over a period of time, over 3, 6, or 12 months, believe it or not, we might have gotten quite a few big cycles to end the year in the positive. In 2018, we are personally targeting 5,000 to 6,000 pips in the currencies and the metals sector. Alright, that is just a formality, expanded flat scenario, or not an expanded flat, sorry, an ending diagonal scenario. Alright, sir, so keeping the ABC expanded flat scenario still alive in the dollar index, let's spread across the Fibonacci ratios. So minimum expectations around 91.77, and it could go all the way towards the 92.70 region as well. Trading point of view, aggressive longs still looking good on to be played. If you're by any chance, if you don't want to take that aggressive trade or risk, then now look at that bullish divergence scenario, what I was talking about on the daily chart. Watch out on the 4-hour chart as well. I mean, rallied all the way, making the wave A, and then ABC, wave B, printing lower, but the RSI is still hanging around the 28 mark. High probability, high potential bullish divergence is seen right now, which could push prices all the way towards the 91.60, 92 levels. Okay, if what I was talking is, if you're a conservative kind of a trader, you might want to remain flat and wait for this to happen. So I'm going to draw an immediate resistance trend line, and you might want to allow prices to break above on the north side of that. Okay, you got, so please allow prices to push not only through the trend line into the buy zone, but also let it take out 90.70 resistance now. That's the first resistance. It could go all the way above the 91 mark as well. These two are pretty close short-term resistance levels. So 100-point rally and then a dip, test the backside of the trend line. We might be getting one more entry towards the 90, 40, 50 mark. Right, that is a more confirmed and more conservative kind of a trade strategy. At this point in time, we are flat in the dollar index, and let's see how this next couple of hours behave. Good bullish divergence are seen. Aggressive longs are trading aggressive trades. 1 to 2% of risk and 10 to 15% of reward. The only thing personally I've done is taken at least 3 to 4% of risk per trade in the euro this time. So if I get tripped out there, then it's going to be a task to get back, right? But that's what how trading goes, all right. So let's move on to gold, brothers. Euro, we are aggressively short. Dollar, we are still uh, waiting for whether or not to take an aggressive long call or to remain flat and go for a conservative long call. All right, the daily chart, gold is threatening one more high. As if you were there with me, we were discussing a probability of a push above 1344, and that's the reason why we were still placing our stop loss above the 1359 mark. And in chance we need to draw that trend line. Not exactly the trend line, but the triangle resistance and support lines. So here the triangle resistance line, and the triangle support trend line. Alright, so we got potential A, B, C, D and E waves. Till the time prices remain below 1357, we will still consider this to be wave E termination point, whether it pips 1344 slightly or not. And then we are targeting 1310, the soft target, and 1236 as the first point for this major support to be taken, and prices pushing lower substantially after that. All right. Not much remains to be discussed on the 4-hour chart except the trend line. I think it's still being back tested, or it's done. Let's find out. Okay, the trend line is giving enough room for gold to I think at least test the trend line backside, but while testing it might actually prove or hit yet another high. Right, so it remains to be seen what kind of reaction gold is giving around the 1345, 1350 mark. Whether it's going to be a wave E termination point, or is it going to break above or towards a new high. And believe it or not, 1357 if taken out, then the weekly chart comes into play. The next resistance for gold could be around the 1450, 1480 mark easily. Alright, so no doubt we are holding on the short side for now, but we'll wait and watch for a reaction around the 1344, 45, or just about the trend line. Alright. Okay, moving ahead to the silver chart now. Absolutely, quite a bit of resemblance is always seen between gold and silver, except for the fact that the boundaries that silver has carved out are much, much, much deeper than what gold has carved out. A, B, C, D, and E. And if this scenario holds on the weekly chart, that's what we are looking right now. If we connect A and C and B and D, let's do that. See, A and C connected, wave E has strongly tested uh, the resistance line as well. On the other hand, if we connect B and D, 1600 levels is support right now according to the weekly chart. Anything below that uh, is going to surprise most of the bullish traders for now. Right, resistance ideally stays above the 1820 mark, but as a trade point of view, we have taken risk around the 17, 80, 90 mark. Right. Looking at the shorter term trade setup, it's still the head and shoulder scenario, which could come into play till the time prices stay below 1740 mark. Head, left shoulder and right shoulder. There is the right shoulder either here done, or we might see a right shoulder there. Alright, so as far as the Fibonacci retracements and extensions are concerned, it's a simple story. It says that it's already retraced 78.6%, 786%. And the next move could go all the way towards the 1570 mark. It's just a matter of time and remains to be seen if silver is pushing one more time towards the 1720 mark or not. Still, high probability remains for a bearish reversal and a strong one from around these levels. Alright, so trading point of view, we are short in gold and silver. The respective stop losses are 1359 plus and 1740 plus. So, to just review quickly on the stories here, Euro USD on the short side aggressively again with the stop around 55. Dollar index, we are flat for now, but any moment watch out for a telegram. There should be an aggressive trade call being issued. And then gold and silver we are short. Quickly Bitcoin now. As we have discussed this daily wave counts, let me do it very quick here. Waves 1, 2, 3, 4, and 5. We are still contemplating whether the ABC move is complete or not. If it is complete, we've just taken a short call, a short risk now. I'm going to put a question mark here whether it's done or according to the Fibonacci ratios. Quite high probability remains for the Bitcoin to print one more low around the 8,500 mark at least. As an alternate though, there could be an extended drop towards the 5500 levels as well. Right, so we just went short. If you go back on the 4-hour chart, please. Yes, we just went short around the 11,000 mark. Expecting 5 down into the wave C. Wave 4 kind of terminated around the 12,000 mark, so we have our risk around the 12,000 region now, and a quick follow through as with wave 5 can go all the way down towards 9,000, 8,500 levels again. Alright, so this is what we are expecting as a probable case scenario in the Bitcoin. Short again from around 11,000, 11,000 plus levels, risk around 12,000. Let's see how this trade is going. Alright, we've made quite a few points in Bitcoin since we began counting. We need to accelerate a bit more in the currency and the metal sector. Don't forget Dow Jones, we are watching very closely, and we are short there as well. It's just beginning to spring up a big surprise. Just waiting for one support to be taken out on a conservative way to go short again. Aggressively, we already short from 26,100 levels. I'll bring up Dow Jones the next session though. New York live, there could be one more high, one last high being printed, and that should be it. That should be most probably it. Alright, so let's bring the current session to a pause, brothers and sisters, and I'll be back again in a few hours to take further during the New York live. Meanwhile, if there are any updates or changes, I'll be sending out messages or chart setups on your telegrams. Keep a watch on that side as well. And if you're not yet subscribed, you might want to do so. And thank you so much once again, with all the bottom of my heart, for all the support and helping me spread the word for this channel. Alright, till the next session, please take care and God bless. Goodbye.